Here are some of the highlights of Biden's tax plan. One, raise corporate tax rate from the current 21% rate all the way to 28%. And then the biggie is restoring the individual tax rate all the way to almost 40%. So what does that all mean for Wall Street? Well, I spoke to Jeff Solomon. He's the CEO of Cowen and Company earlier today. Here's what he had to say.
When you look at whoever's going to be in the White House, there's a few absolutes. One of them is just going to be another fiscal stimulus that comes, and we got to figure out how to pay for it one way or another. So, yeah, I would say, definitely increase taxes, and that's going to be something I think the market is already contending with.
He thinks the market's already contending with it, but this chart may show something different. This is the effective corporate tax rate. It sits right now at about 17%. Before the pandemic, we were at about 23% in 2016. Now, RBC says that the Biden tax cuts could actually reduce those after-tax profits of about 7%. That raises about additional $1 trillion in revenue through 2030, but that's going to hurt certain companies. So which companies are going to be most at risk? So one way of looking at it is taking a look at the returns from the sectors that did really well after President Trump's tax cut and election back in 2016. And what we learn is it's really the cyclical value stocks. You got financials, industrials, and energy. They were the ones that really did well on those tax cuts. The ones that really didn't move that much or actually underperformed were staples, utilities, as well as REITs. Now, industrials, for example, could also be in the hot seat. They're also going to see some upside pressure on wages. That could hurt margins in addition to those corporate tax increases. Consumer discretionary, a very similar story. They're going to have to deal with higher minimum wages and higher corporate taxes. And energy could be one of the ones that suffer the most of all. Higher corporate taxes, maybe a reduction in subsidies. And if you take off the federal land drilling permits, well, that's a whole different story. And so the takeaway is it could be a defensive sector market winners if Joe Biden wins. I just think the question is how bad will the other side fare?